market, right? So the financial market and financial institution are just like that. So the if we take a look at the capital allocation process first, so well-functioning economy, capital flows efficiently from those who supply capital to those who demand it, right? So as we figured out that there are three entities in the market, right? Individual, institutions, and government. So, except the government, we think about the individual and institution. Some individual may be supplier, whereas some individual may be, the demander, a money demander. By the same token, institution may be supplier or demanders. Okay, so individuals and suppliers of the capital, if you take a look at the suppliers of capital first, then the individuals and institutions with excess fund, surplus fund, these groups are saving money and looking for a rate of return on their investment, right? So if some player has the surplus money, which means even if they spend money and but there's some remained, then they want to get more money, right? Which means investment, right? So the amount that we can make the profit is called as rate of return. Okay, so if some entity has a surplus of the money, then they want to get the rate of return on their investment. These groups are saving money and looking for a rate of return on their investment. Whereas demanders or users of capital, individuals and institutions who need to raise funds to finance their investment opportunities. These groups are willing to pay a rate of return on the capital they borrow. So the essential is same thing, rate of return and cost of capital. But from the point of the investor, that is called as rate of return, whereas from the point of the borrower, that is called as cost of capital. Okay, so rate of return, the basic essential characteristic of rate of return equal to cost of capital, right? But from the point of investor, it's gonna be rate of return. From the point of the borrower, it's gonna be cost of capital. Okay. Then why some guy borrow the money to pay the cost of capital? Because they can make the more money than they they pay the cost of capital, right? So return. If the return is higher than cost, then they there is value that they can borrow the money, right? The cost of capital. So some individual, some company, has the money, they can lend the money to the entity who want money, right? So between the demand, the suppliers and the demander, there is financial market, and within the financial market, each player, right? Each player connect the supplier and demander, which is called the financial institution, right? So financial market and financial institution. So you would say the money can be moved from the savers to demander through the financial market. Okay. So, and what kind of the financial market we have? We can classify financial markets in very different ways. Okay, so we can classify the financial market as physical market versus financial market, money market versus capital market, primary market versus secondary market, spot market versus futures market, public market versus private market. So, or financial market can be classified by several ways. Okay, So let's take a look at one by one. So physical asset market versus financial asset market. Physical asset market is a market that we traded assets used to produce goods and services. So basic example of physical asset is land, building, facility, blah 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 blah. Right? So factory, right? So all kind of physical assets are tangible. So you can take a look, right? So what kind of asset is? Okay, that's the tangible. So physical asset is generally tangible, but it's not necessarily. For example, patent can be classified by physical asset, but patent doesn't have any figure, right? So this is intangible. So we would say most of physical assets are tangible, but it's not necessarily, okay? Whereas financial assets are generally intangible. There is no figure, okay? There is no figure. Then what is financial asset? Financial asset is just the form of financial asset, just a sheet, right? Just a sheet. Just a sheet. Financial sheet. But the financial asset has some of right, right? That right is attached to the sheet, right? So the financial asset is some kind of right to claims on real assets or the income generated by real assets. Right? So for example, stock and bond. Stock or bond is representative of financial asset securities. Okay, so let's take a look at the stock first. So if Samsung Electronics Samsung Electronics stock value is, for example, 100, but the land that the Samsung Electronics own has the increase the 50% up, then this real assets value is going to be increased to $150. Then the Samsung Electronics stock also increase. So you'd say financial asset is to write claims on real asset. Or let's take a look at the bond. So if you invest your money in bond, then you can receive interest on the predetermined period and principal at maturity. Okay, so real asset generated by income generated by real asset. We say this is the explanation of bond, right? So even if financial asset doesn't have any, the figure, okay, but just only the sheet, sort of a sheet, but the financial asset has the value, right, attached to some the underlying asset, okay. So that's but this is a sheet. So if some company that issue the stock is bankrupt, then those kind of shit is gonna be 뭐가 돼? 종이가 shit is shit, right? shit 되는 거야, 그죠? shit 돼, 그죠? Shit is gonna be shit, 그죠? If the company that issue the stock is bankrupt, so that's gonna be just the sort of shit, right? Okay, so we can classify the asset as a financial asset or physical asset or financial asset. Or second classification way is the money market or capital market. Only difference between the financial instrument that traded in the money market and the capital market is what? Whether the maturity of the financial instrument is more than 1 year or less than 1 year. So money market is the market that trade securities with maturity of 1 year less than 1 year. How about the capital market instrument? Capital market financial instrument. Capital market is the market that trades security with maturities of more than 1 year. Okay, it depends on maturity. What is maturity? The time that when we receive principal, right? Principal. That's the maturity. Okay. So, if you take a look at the page number 36 to 37, table 2.1. Table 2.1 provide a summary of major market instrument, market participant, and a major market instrument, market participant, and security characteristics. So if you take a look at the first column, there are many various named the financial instrument, right? Second column provide that instrument can be traded on the money market or capital market. That's the second column. Third column, provide the information of major participants. Okay, so who issue the treasury bill, who issue the commercial paper, who issue the CD. You can refer to the column 3, and then the column 3. Then you can make the you can figure out, right? And fourth column provide the information of riskiness. Fifth column is general maturity, original maturity, something like that. So money market and capital market there. Then here's my question. 준서. 이상해. It's weird, 준서. 자꾸 내가 내 이름을 불러. I'm calling my name, 준서. First name is same as 준서. 준서, 김준서. 준서 is very good name. 준서 is very young name. Okay, so as you can see, the student is only 20s, right? I'm a 30s. It's kidding. Okay, yeah. So 준서 is very young name. Okay, the English name is the same thing. Robert, Tom, those things are very old name. The grandparents' name. It's kidding. Yeah. Anyway, so I'm so proud of my name, 준서. Okay. So anyway, 준서.
Yes, Professor.
Yeah. Yeah. So, what do you think about stock? Stock is the money market instrument or the capital market instrument? Stock.
Stock.
To get the answer, you should think about whether stock has maturity or not for the first, right? So stock has maturity or not?
I think
Or
it's
stock
capital.
has maturity? Yeah.
I think it's capital.
Capital market, exactly, right? Because the stock doesn't have any maturity, okay? Bond has maturity, but while the stock doesn't have any maturity, so stock can be classified by capital market instrument, as you can see in page number 37. The bottom line of table 2.1 provide information of preferred stock and common stock there. Okay, so that's gonna be a capital market instrument. Okay, so let's take a look at the roughly. For example, treasury bill. Treasury bill is in money market instrument. Then who issued the treasury bill? Government. For what? To spend money from the point of government in the short run. That's the treasury bill. Every company owns both types of asset. Exactly, right? Yeah, exactly. Every company has the money market, money. I mean the physical asset or the financial asset. Okay, right. So what did I say? Yeah, treasury bill. Treasury bill. Treasury bill. Why? First question is who issued the treasury bill? Government. Why? The reason why? To spend money from the point of government, right? This treasury bill, generally, the maturity is 91 days. So this is the money market instrument. Here in Korea, treasury bill is called as 재정증권. Okay. How about treasury note or treasury bond? Treasury note and treasury bond are also issued by government. Treasury note, general maturity of treasury note is 10 years. Treasury bond is 30 years. So this one can be classified capital market. This is a 국채 in Korean. 국채 in Korean. So as you can see, even if this financial instrument are issued by same entity, the government, same entity, but each financial instrument can be classified by other market, money market instrument, capital market instrument, depending on what? Maturity. Okay, so money market instrument and capital market instrument can be classified by maturity. Okay, by the same token, commercial paper issued by company, bond, corporate bond issued by company, but the commercial paper is classified by money market. Corporate bond can be classified by capital market. Okay, capital market. So generally, financial instruments that are traded in the capital market has the higher return because it's a long time, right? Longer time. So CP is maturity is less than 1 year. Less than 1 year. Corporate bond is generally 3 years bond maturity. Okay, so if you refer to the table 2.1, there are a lot of financial instruments that are traded in the money market or capital market. Okay, so the last one, the bottom line of cap table 2.1 provide information of preferred stock and common stock. We will talk about the stocks later on more detail. But anyway, the stocks are considered as capital market instrument, right? And another classification approach is the primary market and secondary market. Primary market is the market for new issues of securities, market for new issues of securities, whereas secondary market is the market for already existing securities. You get trade market. Trade market is the secondary market, right? Trade market. Primary market is issuing market. Issuing market. Trade market, issuing market. So the most representative primary market is IPO. IPO stands for initial public offering. Initial public offering. Let's go back. And not the further. Go further is here you go. Okay. I will explain in advance in IPO. What is IPO? Initial public offering is where the company issues stock in the public market for the first time, right? Public market for the first time. Going public enables the company's owners to raise capital from a wide variety of outside investors. Once issued, the stock trade in a secondary market, right? So the issuing market is the primary market, and the trading market is secondary market. Public companies are subject to additional regulations and reporting requirement. Okay. So generally, but here in Korea, generally IPO is the same, has the same meaning, used uh, to use the same meaning of list up. Okay, list up means list on some specific exchange, the exchange, right? 거래소. IPO is the the sell the your ownership to the external for the first time is called as IPO. Okay. For instance, Mark. For instance, Mark. The build the startup company. Then Mark start to run this company with his money, right? Mark money and Mark father's money, mother's money, friend money, relative money, right? Nobody except those guys uh, do not want to lend the money to the Mark, right? They do not know what happened to Mark's company, right? So generally, startup company is started with owner's money, right? But fortunately, this company do the business very well. Okay, then the company need to extend their production line. They need to buy the land to build up the new factory, something like that. Then they need money, right? Then how can they raise raise money? We can issue the stock or issue the bond, borrow the money for the short term, right? So we can borrow money for short term, but long term, it's very hard to borrow the huge amount of money for the long term, right? So instead of borrowing money, we may issue the stock or we may issue the bond. To issue the stock means what? I sell my company's ownership, sell ownership to the public for the first time, which is called as IPO. Right? IPO. But the list up is the different story in comparing to the IPO. IPO is the first action to sell your ownership to the public for the first time. List up means what? The action to trade your stock on market, the exchange, right? The exchange, 거래소에서 거래가 되게끔 상장시키는 거죠. 리스트업이 상장. So, frankly speaking, IPO has some distance from the list up. But here in Korea, we use the same meaning, IPO and list up as list up. Okay, list up 할 때 when the company list up, we would say, oh, their company is going to be IPO, right? It's a public offering. Okay, IPO. And Mark's company run the business very, very well. So that size is getting bigger and bigger. Then the company need the money again. So they sell their ownership again, it is called as SEO, Seasoned Equity Offering. 증자 in Korean, 증자. So IPO and SEO is is the sort of primary market. Okay, once the stock is listed up, then the stock marks company stock can be traded in the exchange officially. That is called a secondary market, right? Secondary market, right? So primary market is market for new issues of securities, IPO and SEO. Secondary market, primary. Secondary market is market for already existing securities, as I told you. Korean exchange, NASDAQ, New York Exchange, NASDAQ, New York Stock Exchange, Nikkei Stock Exchange, right? Korea Stock Exchange, KRX, is called as KRX. So secondary market is existing owner sells to another party. So there are two kinds of the secondary market. One of them is organized exchanges. This is 거래소 in Korean, right? So officially, the stock can be traded at organized exchange officially. Okay. Those kind of things, what I told is organized exchange. How about OTC market? OTC stands for over the count. So only listed stock can be traded at the organized exchange. But how come the unlisted stock can be traded? Unlisted stock. We cannot use the organized exchange because the unlisted stock is not listed, the stock, right? Then we can find out some dealer. We can find out some dealer to handle some the stock that I'm interested in, right? So for example, LG CNS, even if LG CNS is very big company, but their company is not listed yet. So if Junso want to buy the LG CNS, then the Junso cannot use the organized exchange because the LG CNS is not listed yet. Okay, now how can Junso buy the LG CNS the stock? You can find dealer to sell LG CNS. Then how can the dealer have the LG CNS? Dealer buy LG CNS from other people, right? So dealer buy some LG CNS from the the some guy, right? And dealer now sell their LG CNS to me. Okay, so we can find out this kind of dealer who handle the specific unlisted stock. That market is called as OTC market, over-the-counter market. Now, how can we find out this dealer? In the past, it's very the hard. Okay, but nowadays, what? A lot of the institution provide a platform to conduct the dealer's work. Okay, so you can find some the platform to act as dealer. So you can find out some the dealer who sell some the specific stock that you are interested in. Okay, so it's the dealer. OTC market. So OTC market is a dealer market. Exchange market is the the as is seen later on, auction market. I will explain later on. So anyway, this kind of things is secondary market. Okay, So the financial market can be classified by primary market or secondary market as well. And we may classify the financial market as spot market versus futures market. Spot market is the markets in which assets are bought or sold for on-spot delivery. So spot market means that we can make the arrangement and simultaneously we can receive the goods, right? That's a spot market. How about futures market? Futures market is in which participants agree today to buy or sell an asset and some future date. So even if we make the arrangement for the contract today, right? Price and the quantity, something like that. But the actual delivery can be, exercised at some future date. That's the futures market. Even if we can make the arrangement today, but the real delivery can be happened in the future. That's the futures market. For example, here in Korea, kimchi, cabbage. We make a lot of the kimchi in October or November or December, right? But from the point of farmer, they always worry about the price of cabbage on November and December, right? So farmers provide the price of some area of cabbage on May or April before the farmers make the harvest. Okay, that's gonna be future. So they can make the arrangement of a contract on May or April, but the real cabbages can be delivered on November or December. Okay, so even if the contract is, the the make arrangement in the November, the May or April, but delivered on later on, right? November, such like November and December. That's the futures. Okay. So futures is one of the financial instrument of derivatives. Derivatives, futures, or options, or swaps. You heard about that. Those kind of things is financial instrument classified by derivatives. I will explain the derivatives later on. So nowadays derivatives is very getting important, more important and important, because the derivatives means what? Derivatives doesn't have any their own asset. Derivatives just like that one, right? In this case, let's go back to the example. In this example, the future, even if we can make the the contract future. So for example, okay, I will buy this cabbage for one unit of area is $10,000, for example. Okay, these features, but it on May, but this price can be changed before the harvest, right? So if the weather is so bad, right? So if we expect the most of the harvest is going to be poor, then this price is going to be decrease $8,000 or $7,000. So this futures price is totally depends on what? This cabbage. We'll say this cabbage is underlying asset. Underlying asset. So if you take a look at this future itself doesn't have any value, right? This future itself, this future's values will always change depending on what? Cabbage's price. So that's why you would say this is the derivatives. So value of derivatives is determined by another asset, which is called as underlying asset. Okay, that's why the name of derivatives. So derivatives value can be determined derived from underlying asset, other asset. That's why we would say these derivatives. So nowadays in finance, derivatives, it has the most extensive characteristic among the lot of the finance area. Okay, so but the problem is what? If you do the derivatives work, you should be good at the math. So most of the engineering student or the physics major physics student do the work for the derivatives. So we'll see the derivative is getting important, more important and more important and more important. I will explain later on more detail. Anyway, that's the derivatives. Futures and futures is contract. The only difference between futures and option is right. This is right to buy or sell. Futures is the associated with the contract, right? So contract, so we should exercise. But the option is right. So if the condition is not satisfied with my thinking, then we may not exercise the option at the maturity. This is right. So if you are but derivatives is the complicated, pretty complicated. So if you are interested in the derivatives, you can take the derivatives course. We open the derivatives. So junior or at junior or senior, you can take the derivatives more detail. All right. So in this class, we'll provide just basic picture of derivatives. All right. Okay, then as next topic is the recent trend. What kind of trend is the changes surround the financial market institution? First one is globalization. Globalization means what? There's no border between countries, right? So even if we are in Korea here, but we can buy the Apple stock, right? Apple, not the physical Apple stock. Tesla, we can Tesla, 이렇게 쓰나? Tesla. We can buy the Tesla stock even if we are here in Korea, right? Which means what? Money can be flowed from one country to other country without any limitation. Of course, there's some the minimum limitation to transfer the one country from the another country to the another country, but it's almost abolished, right? So we can transfer the money from one country to another country freely, generally freely. So this is how come globalization, right? Globalization. Information technology, the can be somehow cause of globalization, right? What are I talking about? So as I told you, you can buy the Tesla stock on your computer, right? So if you use your computer, then you can make access to the member of. So for example, here you go. Let me give you some the procedure how the how the international stock can be traded. You here, right? So you can connect some uh, some security companies, the home trading system, right? This home trading system definitely 신한 Samsung security company. If you are the subscriber of Samsung, the security company, then you can download the home trading system of Samsung security company. Then this home trading Samsung security company can make the the business the relation with, for example, Merrill Lynch, for example, right? Then this home trading system is connected, right? Connected. And some guy, Tom, for example, Tom want to sell some Tesla. Then Tom has the account of the Merrill Lynch. Then they can make the order to sell. Then you can buy the Tesla by using this kind of procedure. Of course, there's some the settlement institution, and we also the via some Korean exchange, right? Korean exchange, not Korean exchange. If the Tesla is listed in New York Stock Exchange, then definitely this Merrill Lynch company's home trading system is connected to the New York Stock Exchange, right? So how those kind of globalization is getting, more actively because due to the information technology, due to the IT, development of IT, globalization has the more speed. Okay, so that we can explain the recent trend of, for example, the globalization or IT together. And derivatives, as I told you, right? Derivatives is most subject to expand, actively in finance area, derivatives. So for example, some derivatives is stock option. Stock option, the underlying asset is stock, right? Stock option. But we can make the financial instrument future based on stock option. Then that financial instrument is called as future on stock option. We can expand, or we can also expand again, swap on future on stock option. We may this kind of financial instrument as well. We can expand infinity, right? So if stock price is changed, then the first derivative, first derived from stock is called the stock option in this example. Stock option price is changed. And then the derivative drive another second derivation. Future and stock option is the price is changed as well. Third derivation, swap on future on stock option is the value is always changed, the changed as well. So as you can see, derivatives can be expand almost infinitely. That's why the derivatives is so important thing. Some of you guys that has a question, okay. I'm sorry, I have been offline for 10 minutes, but for some reason. All right, okay. Okay, Virginia, you're back. You're back, okay. And apply for connection problem, okay, okay. Yeah. Oh, there's connection problem. Virginia and Junso told us there was some connection problem. It's okay. All right. 이렇게 되겠네. 오케이, 알았습니다. 예, 예. 접속의 문제였어요. The connection problem. 오케이. All right. And fourth trend is hybrid. Hybrid means there's the financial instrument who has two kinds of characteristic. For example, stock plus bond. You would say CB, convertible bond. Convertible bond. There's the financial instrument named as convertible bond, 전환사채 in Korean. Convertible bond has two characteristics. Convertible bond is bond, but this bond can be converted to stock. Okay, so CB has two characteristics, stock and bond. So you'd say that kind of trend is hybrid. So hybrid is another recent trend surround the financial market. And last one is ESG. I already explained the ESG more detail in last class, environment, sociology, and governance. So as you know now, the all of the participants within the society has we should the concern about all of interest of all kind of participants, right? Suppliers, employees, the the customers or something like that, right? So we summarize the recent trend surrounding the financial market, just like that. Okay, and next topic is the types of financial institutions. This is common sense, right? You can understand the type of financial institution as common sense. So what each financial institution do is specifically, then you can refer to page number 39 and to the 41 through the 41. You can figure out what kind of work for the specific financial institution. So commercial bank is the familiar with commercial bank. Commercial bank is a traditional department store of finance serving a variety of savers and borrowers, right? So main business model for the commercial banks is what? They can make the money to get the gap between the interest rate for the borrower and interest rate for the lender, right? So commercial bank borrow the money, for example, 2% commercial bank, and commercial bank lend the money 3% to the borrower. Okay, so the gap 1% is main profit resource from commercial bank. That's commercial bank, 은행, 상업은행. Life insurance company, life